death is final, right? I mean, there's no going back, right? That happens. So in this case, the gentleman unfortunately had killed himself just after 1 year. It was a case of suicide. Although insurance companies market their one-day claim settlement, etc., 90-minute claim settlement,
Right.
it is not true with term insurance policies at all. Just because you bought a policy doesn't mean that insurance companies will stop investigating everything related to your policy. After about 4 months again, right, this gentleman was actually diagnosed with cancer.
And then the claims started.
The claim process started. Is that you can be blacklisted for life. You may never get a term insurance policy. I mean, I can't publicly state it, but I know, after working with the insurance company, that these are some things that happen. We've seen insurance companies make that argument in court. If somebody rejects your claim, the other 4 people also will reject your claim.
Hi everyone. I think it was the first week of May when I posted a note inviting questions on term insurance, and many of you did respond to it. So thank you very much for that. In fact, there were more than 100 questions, and as promised, I took these to the Ditto Insurance HQ in Bangalore to Shrehith, the company's co-founder, who not only answered most of those questions, but also offered a lot of advice, examples, suggestions, case studies, and even insider information. Of course, I was resourceful enough to capture all of this over a podcast, and it turned out to be a long one, 90 minutes, I think. But here's what. I really want you to go through the entire video, because the things Shrehith explained not only gives us an excellent idea on what to look for when buying a term insurance plan, but it also helps us understand how best to manage that policy for the years to come. I'm sure you'll find a lot of value in this video. I'm certain you'll share it with others. And if this comes at a time when you're considering a term insurance policy, then do take advantage of Ditto's free 30-minute consultation, the link to which I have attached in this video's description. And now, let's move on to the podcast. Welcome, Shrehith. Thank you so much for taking out the time, and thank you so much for hosting me in this wonderful office you have.
Right.
So there are a lot of questions, and just to give you a background, what's happened is I put in a small post on my YouTube channel, a community post.
Okay.
And unbelievably, within a day, we've got more than 80 questions. We won't
Right.
80 questions, yes.
Correct.
But so before we start with that, I think there's a question which has been bugging me for quite some time.
Right.
So who would go to Ahmedabad and then start a newsletter and then start an insurance business? I mean, what made you get into something like this?
Yeah. Thank you, Shankar. I mean, thank you for having me on your podcast. And yeah, I mean, that's always an interesting question. I mean, looking back, if I ask myself, why would I do this? I don't think I have a very straightforward answer.
Right.
Like, I can explain to you my thought process leading up to it, right? I wasn't a great student at IIM, right? I don't think I did particularly well. My grades were terrible. I wasn't doing well with other things as well. I wasn't a part of other committees, clubs, etc. So I was struggling, and because I was struggling, I think leading up to the placements, I was petrified of having been the last person to get placed, or God forbid, not being placed at all.
Nice.
So I was looking for an exit option per se, right? I didn't want to go through the placement process. I was like, if I can chicken out, I'll do it right now. If I find anything that I can use as an excuse then to sort of, get out of the placement process. So I wasn't thinking about making X amount of money, right out of college or anything, because I was just like, man, I don't want to do this, right? Anything but this. And luckily for me, I had another sort of batchmate of mine who probably had a slightly more robust idea of what he was going to do. So he was working on something related to financial literacy,
right,
and he wanted to improve the retail participation in stock markets in India. And so he came up to me and said, look, if you're willing to sort of partner with me, maybe, we can do something together, right? And so that's how it started. And initially we wanted to build a stock broking platform, like any naive 23, 24-year-old, we thought, that's going to be straightforward, because Zerodha at the time was making a lot of money, a lot of,
right,
noise. And we thought, there's very few competitors to Zerodha. How about we build a real competitor to Zerodha? We'll do this, we'll do that. And I think within a couple of months, we realized that setting up a brokerage business is still very capital intensive. I think it takes about 2 or 3 crores just to procure the license and put together sort of the, a foundation for you to then build on from there. So we thought, okay, we can't raise that kind of money. So what can we do? The only thing that we could do at the time was content. Right. So that's how, content became a thing. And we thought, okay, we'll build a community and eventually we'll get the license. Eventually we'll be able to build a
All this
competitor.
was leading up to you having those ambitions of doing a
stockbroking platform, right? And yeah, so that's how the content thing began. And luckily for us, after about a year, we realized that plan was going to go nowhere, and Nitin sort of funded us anyway. So we were like, okay, let's put that aside and let's focus on content. But the problem with content is content rarely ever makes money, or at least money at the scale of, for an individual content creator, I think content could be like a great way to sort of make money, right? But yeah, some money. But I think for a business, if you've already raised money, etc., it can be very difficult to sort of make money from content alone.
Right.
So we always wanted to do commerce, right? And the initial plan was to do something related to financial advisory, end-to-end advisory, because that's something that Zerodha wanted to do, but didn't have the bandwidth to do it. So they thought it's best to sort of, ask us to do it. And we were, willing participants, right? We were like, okay, let's do this. But during COVID, we had our plans in place. We wanted to launch the product. And then COVID happened and it didn't work out, right? And the only thing we could do at the time was insurance, right? Because as part of our financial advisory portfolio, insurance was also a component, right?
And then the awareness was anyway up because of COVID.
Because of COVID, and we felt like it sits in our wheelhouse because we do simplify stuff, with Finshots, and even back in the day with Finception, we thought we could use our expertise to simplify a very complicated product, insurance. And so, I would say that most of it happened by way of accident or circumstance, right? So yeah, I mean, ultimately we ended up doing insurance, and insurance luckily worked out for us, right?
And even within insurance, now there are multiple models,
right?
But you chose the path less chosen by actually using more of inbound references coming in, leads coming in, etc. So any insights on, how that actually came about? Because that's not the tried and tested model. The tried and tested model is, you have performance marketing happening, you have call center binding that's happening. But this is completely new.
Yeah. Shankar, I think it's very interesting because at the time when we started this, it wasn't because, again, we realized that we had already had an audience, right? So our first focus was if we can monetize this audience, in the sense that if we could sell insurance policies to a community that's been reading us since, 3 years, right? Because we'd done Finshots for 3 years before we launched Ditto, right? So we thought we could use that community and then perhaps see if people would even be interested in buying an insurance policy from us. And when that worked out, suddenly we were like, oh, okay, that's nice. Maybe we can build on this now. We can create more content and we can perhaps gear it towards insurance to a certain degree and see if people are interested. And that sort of kept going, right? And once that kept going, we realized we had built something meaningful in the sense that because it was inbound leads, because these people were readers, it was very easy to convince them, right?
Okay.
They were willing participants in the sense that we'd educate them, we'd explain the policies. We would sometimes take over an hour to just walk them through everything, and then they'd buy the policy. And what ended up happening was insurance companies also loved to work with us because they were realizing that these customers weren't the kind of customers they'd often see, right? Most customers would probably lie on proposal forms, would get a policy because they don't have any other options outside. They've been missold a policy because an agent was trying to commit a sale. And usually this burns the book, right? The insurer then has to bear the brunt because you get frivolous claims, you have to deal with costs. And so for us, they suddenly realized that most customers coming in were pristine customers who rarely ever made a claim. They were buying it as a protection product, true protection product, right? And some ways, I think that gave us an advantage to then build on it, right? We realized that this could be something meaningful. And we've never had to commit to performance marketing because once the content business took off, we had a pool of leads coming in. The service component, right? The fact that we really sort of did not spam people, we compromised on short-term revenue, so to speak. And what ended up happening was a lot of our customers were referring people in their communities, right? And these were customers who were probably earning, 20, 30, 40 lakhs per annum. I mean, these were high-paying, individuals, and their community also, consisted of people similar to their profiles, right? And suddenly, the referrals started coming in, and we never had to rely on performance marketing or going all gung-ho. And so we were very keen, even when we worked with influencers, for instance, the primary motive was to educate people, right? Sales was always an afterthought. So it just worked out that way. It seemingly began from us trying to monetize our community, and then suddenly we realized a lot of other things that we did that just aided to this sort of.
Yeah, but I have this question, right?
Yeah.
So you're right. You're bang in the middle of the investor on one side and the customer on the other.
Correct.
Now, keeping it spam free,
Right.
focusing on support.
Right.
It keeps the customer happy, obviously.
yeah.
How do you keep the investor happy?
I think for us, luckily, our investor is generally happy as is, because Zerodha is a sorted company as such, right?
Yeah.
Nitin, for instance, I don't think we've ever had a conversation with Nitin where he's asking us for, what's the top line growth going to look like. I mean, even when we send numbers, right? He's rarely ever bothered. I mean, at best, he'll heart our message, right? That's about it. Right, that's what you get from him. I mean, if he sees a review, a public review outside, and somebody praising Ditto, that gets him excited, right? Because he really wants to do good.
Yeah.
I know from the outside, I think a lot of people are skeptical if that's sort of an image that he's built, and they're not very sure that he really has the customer's best interest at heart. But I can say safely that
You've interacted more than
of course, right? And as an investor as well, it would have shown, right? At some point, the pressure would have shown.
Right.
Even now, growth is an afterthought. Even I remember in a town hall discussion, we had invited Nitin, and we were talking about how much we intend to grow next year, right? Because we have plans, ambitions. And Nitin was like, don't do all of this, right? I mean, you'll grow as much as you grow, right? I'm pretty sure you will try your best anyway. Because if you have an arbitrary target, I mean, in some ways you're setting a ceiling as well.
Right.
And in some ways it's also not fair to the customers, right? Because then you'll probably have to compromise on things. So investor has never been a problem. The issue has, I mean, perhaps to a certain extent, always been whether we can make money from this, right? And luckily, because our cost structures were streamlined, we used content, which isn't very expensive, by the way. It's not as expensive as performance marketing. Referrals is a free medium, right? And so our cost structures were always streamlined. So we never really worried about sort of losing money. In fact, I think right from the first year of operations, we were always profitable. I think the first year we barely broke even, but since the next couple of years, right, we've been profitable, and we never even had to dip to the reserves, in the sense that the funds that we raised from Zerodha, we didn't have to use it.
Yeah.
Right? So we were always comfortably, I mean, from a financial point of view, we were rather comfortable. And so we didn't have to worry about foregoing short-term revenues. And the upside here is that if I do forego short-term revenue, if I do not harass customers, if I do not spam them, if I do not force sell policies to people who perhaps don't need policies in the first place, right? Because they already have a good policy, what ends up happening is they go and refer. For instance, on Google, we have close to 7,000 odd reviews, and people have rated us 4.9. Now, that in isolation, that may not mean much, but what that also means is that each one of these individuals, every conversation that comes up related to insurance, they'll only have good things to say about us, right? And that kind of word of mouth, right, it's very hard to, I think, garner otherwise. And it really benefits you in the long run, or at least that's what we are seeing, right? Our book is good. We still make enough money for us to not worry about raising more money or, foregoing, short-term benefits, as I put it earlier. And we can just focus on building the company as we want to build it, right, with the customer's interest at heart. And so yeah, I mean, luckily it's worked out for us, and hopefully we can double down on it going forward.
I agree, because I'm a customer. Actually, I'm not a customer. I'm more of a prospect.
Right.
So I called up the Ditto helpline.
Right.
And this is more on health insurance.
Right.
And I had a policy renewal that's coming up because I'm moving into the 46 band.
Oh, got it.
I was concerned because the premium jumps up and everything. So should I have a different policy or something? And I was pretty sure the person at the other end, Radhika, her name was, would probably convince me to, kind of port to a different plan or something. But she was like dead against it. She was like, no way, don't touch that policy. And the best you can do is probably you can upgrade to a better plan within the same thing, but no need to go for a different company or anything. And and I was convinced because she said something which I didn't know, that there's an 8-year moratorium on health policies. And don't allow your policy to kind of flip and
correct.
That starts from zero once again. So I went with that advice. Now here's the best part. This entire call was 7 minutes. In 7 minutes, whatever I wanted was discussed, and she had convinced me that probably flipping is not a good idea.
Right.
So I can clearly see where you guys come from, and that's something good. Great. So let's get on to the main event. A lot of customers have been asking questions, and me and Samarth, we've been kind of vetting through that entire question set, and we are amazed at the kind of questions people have asked.
Wow,
It's like really tough ones.
Really?
Yeah.
So
So
excited.
we're ready for that.
Yeah.
Let's start with the basic one.
Okay.
The question is till what age should one go for a plan?
Yeah.
So it's like 60, 70, 80, whatever.
Yeah.
And how should one really calculate the coverage amount?
Correct. Right.
What are your thoughts?
Yeah. So I think the first question is fairly straightforward. I think there is a notion that, within the domain, at least insurance industry, at least, longer is always better, right? Because it's like you buy till 80, 90, by then you'll most likely pass away anyway.
Inheritance mil
Correct. Inheritance mil jayega. And this idea is very appealing to a lot of people as well. Right? However, there's a few problems with it. Problem A is, if you know that by 90, 95, whatever that number is, you're likely to move on. And the insurance company also knows this fact, then there is a question to be asked. Why would they then charge you a lower premium and just pass on the massive corpus to you without actually putting any friction points in between, right? And the friction point is usually very simple. The premiums really go out of hand, right? The moment you start buying a policy covering you till 85, 90, you'll see the premiums rise substantially.
And they'll stop calling for renewal reminders and stuff.
Correct,
like that.
correct. I mean, that also happens, right? But even otherwise, I mean, just the prospect of having to pay such high premiums can be off-putting to a lot of people, but still you rationalize it by saying, "Ki 1 crore, 2 crore, you mil jayega," right? Again, the second part is 1 crore, 2 crore, who will get it, right? By the age of 60, 65, what we've seen is for the customer profiles that we've looked at, most customer profiles, people generally retire. They either have, earning members in the family, their kids,
Correct.
Or they have a corpus already built. And if you have a corpus built already, the additional sum that you receive, right, when you pass away, etc., may not be meaningful enough to impact either your spouse or your family members, right?
Understood.
Because by then, inflation will eat away most of the gains anyway, right? So it's not like it's going to be a life-changing sum for anybody. Second, after that, you have to ask, who are you protecting? The idea of buying a term insurance policy is you want to protect somebody who may need the money to perhaps supplement their finances when you are not around.
Right.
Essentially, you're trying to create a replica of yourself financially. Somebody who can offer the same kind of cash flows. That's how I think about it when I'm buying a term insurance policy. Who are you trying to protect after you retire? Or at least by the time you retire, by and large, I'm assuming for most people, they will not have dependents. So if you don't have dependents, what is the point of buying a term insurance policy till the age of 80, 85 anyway, right? So in my mind, I think when you're buying a term insurance policy, the first question is, when are you likely to retire? If you believe that age is between the ages of 60, 65, 70,
Right.
I think you can pick a number anywhere between that. Generally, we recommend people to choose a number between 60 and 70, since that's when most people retire. And anybody who suggests that, who asks us if, should I buy a policy till 85, 90, etc., we dissuade them strongly because it doesn't make a lot of sense. Now, how do you decide the cover amount? That's a slightly more trickier question, right? And perhaps maybe I'll supplement another thing there. I think there are some people who come to us and say, "Bhai, I think I'll generate a corpus significant enough for me to supplement my retirement income by the age of 50, 55. If you have that kind of clarity and if you believe strongly that you will be able to do that, I suggest that you can pick a policy that covers you till 50, 55 also. There is nothing wrong with that, right? But generally we tell ki as a slight buffer, right?
Margin of safety.
Yes, margin of safety thing, right? Perhaps 60 is a good number, but if you feel like 50, 55 is good enough, that is also fair. Now, cover amount, right? I think cover amount pe, again, there's a lot of discussions. Some people will tell you simply take a multiplier, put a 20 multiplier, 25x multiplier.
Life insurance company.
Easy, right? Or most agents you go to, they'll tell maximum le lo. Ki cover to, this thing. Again, I think there is a middle ground to be found here, right? The first thing is maximum may not always be optimal, right? If you're single and if you're probably planning on, building a family much later in life, maybe your expenses won't tally up to a significant sum anyway, right? So I think the first thing that you will have to do is sit with a counselor and advisor and probably map out your life in some sense, right? Obviously, it's very hard to map out your life without knowing exactly how things will pan out. But you have ambitions. You have ideas. Ki yaar, maybe I'll get married by the age of 35. I'll probably have my dependents at the age of, my children going to school at the age of this thing. Maybe I'll need to buy a home at this. Once you sit out and map out these expenses, it becomes a lot easier for you to decide what your dependents will need in your absence. Because that's what you're trying to do. Like I said, a financial replica that can support the cash flows, right? So then what you're trying to do is map out your expenses. You add the inflation, right? You say, okay, 5%, 6% inflation. There is a little bit of math involved, and some calculators will help you give you an estimate. But if you sit with an advisor again, it becomes a lot more easier because you can map out specific expenses.
Correct.
Once you account for all the expenses, you may have some assets in mind. You sort of probably, you say, okay, assets will cover this much. And then I will need so much in my bank account so that the principal and the interest accruing from that money will support my dependents until the age of 60, 65, until I would have provided for them, until I would have retired if I were alive.
Understand.
Right? Asking this simple question and sort of mapping these expenses will help you arrive at a number.
And then you add the liabilities, the loans.
Correct. You probably put out the liabilities together. Liabilities maybe. I think a lot of people forget that when you take a home loan, for instance, you will have some sort of, policy associated with that also, because the bank will want to sort of cover the cost exigency. So then you can remove that, right? So again, making sure that you sit with somebody and sort of map out your expenses, see clearly what liabilities are covered, not covered, will probably help you get a better estimate. Right? Because you then don't have to pay higher premiums, A, and B, you don't end up taking a lower cover, because some people will look at 1 crore and think that's a lot of money. But when you put it in a bank, a simple fixed deposit, forget about stocks, etc. Simple fixed deposit, and you see the principal and the interest, how long it will cover my dependents, you'll see that 5 years pay, it's gone. Because your expenses are, exploding, right?
And then the 30% tax to be paid on the
tax also. Yeah. So funnily enough, the income from the payouts for term insurance is not taxed. Right. So even though other investment income will be taxed, the corpus that you receive from term insurance,
deploy it somewhere,
then you have to get then the taxes come in. But people also, when they come to us, I think one question they have is, okay, I'm buying a 2 crore term plan. How much do I have to pay the government, right? Which is generally, a misnomer, right? You don't have to pay anything. You'll get the full 2 crores.
It's tax free for you.
It's tax free for you. So I just wanted to issue that clarification. But yes, this is generally how you go about it, right? There's no one magic number.
One number per se. Great. So another related point that comes in is, what are the most important variables that one should see? So I've always gone through, the life insurance journey, and it's generally those 3 questions, right? What's your gender? What's your smoking habit? What's the sum assured that you want? What's your age? It just kind of finishes there. But, and then you get a long list of companies that, and there's a lot of complication inside it. There is sum assured, there is premium, there is claim settlement ratio, there are add-ons. Is there a priority set on how you should look at things one by one?
Right. Excellent question. I think when it comes to life insurance, right, I think the issue with this product is that you're not going to be around to claim the money yourself. So you buy it and somebody else will probably benefit from it. As a beneficiary, it's not you, right? And whenever that happens, there's some degree of dissonance, right? Exactly what happened. You want to make sure whatever product you buy. Exactly. Fortunately, with term, unlike health, where there can be a lot of gray areas, disputes, right? Whether this happened or not, death is final, right? I mean, there's no going back, right? Death happens, right? And once it's happened, there's very little room for, disputing anything, right? The only question is whether the individual has been forthright in declaring everything that they know before they bought the policy. Right? That's the only question from the insurer's point. From the customer's point, the big question is, will I get the claim or not? And to answer that, a few things that you should probably look at is A, the standard, your settlement ratios, the claim settlement ratio, making sure that out of the 100 claims, at least when it comes to death claims, 99 claims should be paid out. Any provider who has a claim settlement ratio less than 98, for instance, I would be very wary of. Simply because there can't be many disputes with death. Right. You have to pay out. I mean, if you're not paying out, what are you doing? Right? It's very hard. And also, with term insurance, the mandate is very clear. There's a 3-year moratorium period, which means 3 years after buying, within the 3 years of buying your policy, an insurer can dispute a claim for any matter related to non-disclosure or any other, things. After 3 years, they cannot dispute the claim, right? It's very hard for them to then dispute the claim, and will die. More often than not, will side with the customer. The ombudsman also will side with the customer, so the payout will be made. Unless, there's a case of established fraud, which is very, the standard for that bar is set very high, right? So most likely the claim has to be paid. So the dispute is within 3 years, right? And so when you consider all of this, you'll see that the claim settlement ratio has to be more than 90%. 99%, right? 98% also, I'm sort of very 99%, 98, 99, okay. But anything below 98%, I am slightly skeptical because what is happening?
Right.
Now, there's also another sort of, there's a conversation going around saying ki insurance company can game this number, which is true. To a certain extent, they can probably play fast and loose with these numbers, even though they have to report it to the regulator. But ultimately, if you're making a holistic decision, you have to rely on what the insurance company provides.
I've worked with a life insurance company.
Right? I mean, there's only so much as a customer you can do. So I think I'm not saying that this is foolproof, but at least these are numbers that you have to look at.
Right.
Second is the amount settlement ratio. Again, I settle 99 claims out of 100, but how much money do I pay out? Am I skimping on the 10 crore claim and paying out all the smaller claims, 25 lakh, 50 lakh, 1 crore ka claim, and then that 10 crore claim I hold on because that is the massive payout, right? So you look at the amount settlement ratio, which basically tells you ki 100 rupees customer claims, how much will the insurance company pay out, right? Again, any number less than say 90 is deeply problematic here. Right? Because I'm thinking that's the industry standard. I look at the median, I look at what the industry is paying out. If you're lower than industry standards, I'm slightly skeptical now. Right?
But Shrehith, 98 to 99, this thing, I see a bunch of insurers actually declaring.
Correct.
I mean, there's a fight between insurers. Someone is like 99.35, I have 99.39.
Correct.
Should the customer actually get into this granular detail of looking at every point and every decimal when it comes to the claim?
Correct. I think beyond a certain degree, there's very little a customer can do. Up 0.5, 0.6. Next year, the numbers change slightly. Right? So you have to take a 3-year average. A 3-year average also will move. It's not like it's a static, number, variable, right? One day, I remember one of our, insurance partners, providers, very popular one, by the way, I will not name them, right? Had some issues during COVID, right? And they realized that there was a certain group of customers making frivolous claims, and eventually their, amount settlement ratio
number had come down.
Suddenly for 1 year, right? And then they caught back up, right? Because of that, this thing. That number suddenly will pull the average down, and suddenly customers will look at it and say, what is happening, right? So it's very hard to make wholly, like I said, these are numbers that you look at upar ke saying ki I will eliminate all the red flags. So I don't think there's a lot of merit in you picking out these numbers, on a granular manner and saying ki 0.5,
so there's not a selection criteria. You're saying it's more of a filtering.
It's a filtering criteria. That's a very good way to put it. I think you can reject companies based this, but I don't think you should select companies based this. Selection should always happen based on features that you probably will suit you best, right? And that will probably get to. And finally, one more thing that we look at is complaints.
Okay.
This number you can find on the insurer's website because they're expected to disclose it.
Right.
And if you see that the complaint volume is very high, right? And this is per 10,000, claims made. Then again, like if every claim is a dispute, then I'm sort of wary, right? So if the complaint number is say 80, 90, 100, even for 10,000 claims, that ratio is very small actually. But let's say somebody like, a top provider, probably has complaint volume to the tune of maybe 8, 9, complaints. Somebody has 100, then maybe you should look at that 100 claim, complaint volume.
उसमें भी gaming होता है ना?
उसमें भी होता है यार. मतलब सब पे gaming होता है. The maximum that I've realized that a customer can do is hope, like I said, is use this as a filtering method. And then again, go to the advisor, because ultimately what tends to happen is once you buy a policy, then it's a game of chicken and, it's a game of cat and mouse.
Right.
You want to make sure that you outwit the insurance company. Insurance company wants to outwit you.
Chore police.
Yeah, but same thing, right? And then you're at the mercy of the insurance company because the insurance company has no real incentive to pay out the claim per se. Yes, it is their job, their role. That is what they're supposed to do. But there's also an incentive to not pay out the claim.
Right.
They can find any avenue to do it.
Right.
Right, then it becomes a mistake. So then ultimately your agent has to help you.
Correct.
Now that could be somebody like Ditto, or that could be an agent that you know or trust. I've always believed that some people come to us and say, "Ki, look, I want to buy a policy from you, but there's an agent that I've worked with for 20 years.
Yes.
This guy has helped everyone,
uncle,
right? Exactly. Yeah. Fair enough. Because ultimately peace of mind is very important. Right? If you want to buy from him, I will not be an impediment. You go buy from him.
Nice.
Yes, I have, I for instance can always promise my services. I can say, look, I have scale, I have leverage.
Right.
I have expertise that maybe, the agent doesn't have, because I work with thousands of cases. Right. I see multiple cases and then I can build a repository. I can use my learning because I have hundreds and thousands of customers. Right. I can use that knowledge to probably better make my case, right, when it comes to disputes, etc. But if you trust him, you do it. Right. That's okay. That's fine. That's completely all right. But ultimately, once you buy a policy, then your agent has a massive role to play. Because if you're not around, your agent has to be there. And perhaps we can talk about what happens then, etc. But before I move there, maybe a couple of things about selecting a product.
Correct.
Right? Because you still have to filter now.
Right.
Okay, how do I filter? Now, this depends on you. Like if somebody says, look, critical illness is a big thing for me.
Okay.
Right? I'm worried that if I ever have a critical illness, yes, my health insurance company will pay out for all my medical expenses.
Correct.
What about lost income? Right? I remember my dad, for instance, I think when I was in upper kindergarten, right, had a serious illness. And I think, expenses were taken care of, hospital expenses, because we had a bit of savings. But he used to work abroad. He used to work in Dubai, for instance. Right?
The income got shut off.
Suddenly shut off, right? We're back in, we were on the verge of bankruptcy because there's absolutely no income. And something like a critical illness rider, for instance, right, that can pay out for certain critical illnesses, that, that can give me a corpus of, say, 20, 30 lakhs that I can use to supplement my income, can come in extremely handy. So then the question becomes, okay, which policy or which company offers me the best critical illness benefit with the least amount of impediments, right? And then it's a shortlisting criteria there. Right? I have to select, okay, Max Life does this, HDFC Life does this, ICICI Pru does this.
They have different terms and conditions.
Terms and conditions, right? There's survival period, waiting periods.
Right.
There are things like what kind of illnesses are covered.
Correct.
Right? Internally, we also know the pricing structure, for instance, changes. And in some cases, we know which insurer is very nitpicky when it comes to critical illness. Like some companies say, we don't like critical illness that much. So the pricing is very high. So they really don't want to sell the product. They're just selling it because there's demand. And so we're like, don't buy it. Buy somebody else. I mean, I can't publicly state it, but I know, after working with the insurance company, that these are some things that happen. So I can then adequately guide the customer to say, this is perhaps a better choice for you. Right? So then it becomes customer preference, right? Some people will say, I'm too worried about disabilities. Some people will say, I travel a lot, accidents are a main.
Correct.
Right? So then you have to look at the accidental, benefit rider. Right? And then so it depends on what kind of add-ons different companies provide. Some people say, look, I want to include my spouse in the same plan. Right? I want a joint term plan, for instance, right?
Is that even possible?
It's possible with some providers, right? But then there are compromises you have to make.
Okay.
Right? And so you have to then say, okay, maybe that's not a good plan. Maybe you should buy 2 separate plans from this provider. So ultimately it becomes, you have to pick and choose, right, depending on what the customer wants. And then it becomes a selection criteria. And ultimately you're selecting the product, not necessarily the provider, because each provider has 1 or 2 products max.
That's correct.
Right? So you select the product and then you automatically select the provider, right? So once you filter all the bad apples, you ultimately select based on what you want, what your preferences are, and then you have a select set of insurance companies or products that you may choose. And so this is what, and pricing also plays a role, right? So this is what it boils down to.
In fact, let me kind of reduce that to a simple framework. So let's say someone is not bothered with add-ons.
Correct.
Nothing. So he's looked at the claim settlement ratio, that's 98 plus, let's say 99 plus.
Correct.
Which means it does just come down to the premium there.
It comes down to premiums. That's about it. And maybe lifestyle habits. If you're a smoker, for instance, maybe again, your premiums could change. But yes, it boils down to premiums there.
So the next step there, the next layer there is if I do a descending order sort. Or is it a ascending order? So from low to high. In terms of premiums.
Yes.
I mean, should I be more focused on the low premium one or the average premium one?
Correct.
High, definitely not. Correct. But I mean, should I just pick up the lowest provider?
That's a good question, right? Once you filter this down, what if you have a provider that fits the criteria, low premium,
right?
But then there's one criteria that I probably did not mention is that they don't have a big enough book, okay? Right? That the scale of operations is very small. Now I'll tell you why. This shouldn't be an issue per se.
Yeah.
But what tends to happen is as a business scales, what we've seen is some of these ratios go for a toss.
Okay.
So what you're essentially saying, if a company hasn't scaled enough to the size of, say, an HDFC Life or a Max Life or even an iPro, right? Massive in scale, right?
Right.
We've seen internally that when they scale, when they start accruing more customers, generally these ratios also change a lot. Because term insurance product, once you buy, you want to stick with the same provider. You don't want to switch, right? A good sort of rule of thumb is to probably go with a provider who already has scale, who has a massive sort of, set of customers. Because when you scale, you see a lot of problem with operations, you see a lot of problem with claim settlement, everything, right? Everything goes for it. So then we say, okay, as a precautionary measure, perhaps you don't go with a provider who has only, who sold 2,000 policies. That may not be the best way to go about this business, right? You want some scale, right? And so that is the only other filtering criteria. Otherwise, you're right. If I have somebody who's providing the lowest premiums, I should probably pick them. And that's what our customers do as well. Right. Oftentimes, we don't dissuade them because there's no real reason for me to dissuade them.
Correct.
Why would I, right? Correct. Then it becomes a matter of how well you can sort of position yourself to make sure that there isn't any dispute when it comes to claim. And this is a function of how well you can answer the proposal form. That's it, your application form. It boils down to just this, right? And there, a lot of challenges emerge, right? With term insurance, what we've seen is it's not the act of buying the policy. It's getting the policy that's really hard, right?
The issuance part of the policy.
It's very challenging, right? So yeah, that's what it boils down to, right? Once you buy a policy,
we have some questions on the issuance part.
Yeah.
So I think it's a pain point for
it's a pain point for a lot of people. Yeah.
But let's spend some time on the claim part, right? So Ditto, you told me earlier before we started this that Ditto has this support team.
That
you've exclusively kept for claim, and it's not. It's just not for namesake.
Yeah.
You do a lot of stuff with insurers, etc.
Yeah.
If you can just give some examples also on something that was like.
Yeah.
I mean, the customer was really hassled because, as you rightly said, it's the beneficiary who takes advantage of that product, not the person who's taking the thing. If you share some examples of how the claim support team actually works.
Yeah. I think Shankar, this is an excellent example. I think a lot of people come to us and say, look, I love your advice. I love the fact that you don't spam me.
Yeah.
I love everything. But now I can buy the policy directly from the insurance company. Why do I need you?
Yeah.
And that's a fair question, right? Because they're like, what is the benefit? I'm not getting a better pricing.
Right.
Pricing is the same.
Right.
So what is the benefit? And I think this is where, sort of you separate the wheat from the chaff, because what tends to happen is when your beneficiary has to fight on your behalf, right? It can be an extremely arduous journey. And we obviously see this with health. Because health पे यार कुछ भी dispute करते हैं, right? Even legitimate claims insurance companies dispute, and then you have to run pillar to post to make sure your claim is approved. But term में the problem is magnified 10 times because the issues that crop up can be really devastating for the family. And I can quote maybe
and the applicant is no longer there.
He is no longer there, right? Because you bought the product and you are no longer there. Perhaps one example I can quote is that we've had a case of a few months back, and that, obviously most people who buy a policy, they don't end up buying a policy thinking that they'll die in the next few years, right? So death is a very rare event per se. So we've not had a lot of term insurance claims, thank God. But when it does happen, it can be very, very, very challenging. Because as I told you earlier, there's a 3-year moratorium period, right? And whenever you have a claim within this period, the investigation can span 3 months. Although insurance companies market their 1-day claim settlement, etc., 90-minute claim settlement,
right?
It is not true with term insurance policies at all.
Okay.
This takes time. After 3 years, yes, issuance is much more quicker. But before 3 years, it takes at least 3 months for the claim to be processed.
Right.
Now, what happens in these 3 months? During these 3 months, you have to put yourself in the shoes of the insurance company. The insurance company now has to pay 1.5, 2 crores, 2.5 crores. So in the case that I was just describing, I think the claim amount was around 1.5 to 2 crores. I don't remember the exact number, but that was the figure. They'll do everything in their power to make sure that 1.5, 2 crores doesn't go out unless they're fully sure that everything is in place, right? So the first thing is obviously they want to make sure that the nature of death, there is no suspicion there, right? So in this case, the gentleman unfortunately had killed himself just after 1 year.
Okay.
It was a case of suicide. Now, in cases of suicide, the term insurance mandate is very clear. The policy will be paid out so long as the suicide happens after the first year. So this happened right after the first year. And so the investigation began. But there was no straight denial because obviously the mandate is clear. After 1 year, the company
was very clear that
yes, you have to pay out, right? Now, next, what happens is to establish the nature of death. So the insurance company began their investigation. They sent their teams, etc., and they sent their team to the family. Right.
Okay.
Now, there's a certain stigma associated with suicides in India. Right? Nobody wants to disclose it to anybody. And so what had happened was, unfortunately, the dependent in this case had stated that the gentleman had passed away because of a heart condition. Right? And this created issues because the team would go to family members and harass them saying ki, how come, I say, how can, this happen with the person had killed himself. Now, the spouse is also very upset because they're like, this is a breach of privacy, right? How can they go and sort of, I did not want this to be disclosed. So now as an agent, as an intermediary, our job is to make sure that A, the claim is still processed, the investigation still goes through, but it's done with empathy. Right? So we have to use our leverage scale, put our foot down, and we have to go and bully the insurance company back and say, this won't happen, not with my customers. Right? So the role of the agent then becomes extremely important because you serve as a conduit between the insurance company and the customer. The customer now has completely lost faith in insurance company. They don't want to interact with them because they're like, this is very off-putting for them. They've already suffered a death in the family and it's almost like you're rubbing salt.
You're accusing them, of something fraudulent or something.
Exactly. But the insurance company has to do its investigation. These discrepancies have to be sorted out. And then they also want to look at psychiatry reports. They want to go, ask the family, was there a case of depression? Because then if it's a case of depression and they've sought medical consultation, that should have been disclosed in the policy.
Understood.
If it's not disclosed, it's a case of non-disclosure. Policy is void.
Correct.
Right? And then we have to make sure that, depression is a word people throw around casually. Right? You have to make sure that the spouse knows that what we're talking about is clinical depression.
Correct.
And there has to be medical consultation sought prior. Right? It can't just be, I'm depressed.
Correct.
People use it very casually in India.
Absolutely.
Right? And that can be reason for, claim rejection as well. So suddenly our job becomes to then go to the customer, educate them, in this case, the dependents, and tell them ki, when such questions come, make sure that obviously you have to be truthful. Right? You can't say ki, because insurance company will catch you eventually. Right? I mean, yes, you can get away with a couple things, but also you don't get yourself caught by disclosing something that is untrue also. Right?
You're saying this as if, we've got to train the beneficiary also into what should be told.
In some sense, that is true. Although I wouldn't use that word specifically because then we'll be in contravention of rules,
Correct.
But yes, we have to educate them because, it's like, in movie series, if you watched a US movie, for instance, there is this protection from self-incrimination. You won't say anything, right? The Miranda rights, right?
Correct.
Yes, to make sure that you don't say something that can be used against you.
Correct.
Right? Obviously, that's true here also. You don't say something.
Constitutional Amendment number 5 or something.
Correct, So I plead the fifth this year, right?
Plead the fifth.
Yes.
Right.
So here it's the same, right? You don't say something that is perhaps you use the word depression casually, but then it becomes a point of contention. So a lot of things like this, right? They go investigate, they dig.
That's very interesting.
Yes, and so then we have to make sure that customer doesn't get caught up in this thing mess, right? And so this can happen, and maybe death is not as common, but critical illnesses are common. I remember back in the day when we just started Ditto, we didn't have advisors. So we thought that if we're going to build this business, let's figure out how to build this business. So we would go to customers and we'd call them, right? We would sort of, somebody books a call as founders, all four of us, right? We'd call them and we'd sort of sell the policies, we'd educate them, etc. And that's how we learned how to build a business. And so for the first 2 months, this is what we did. And back then, all the founders would take calls because that's the thing, right?
Of course.
And so Bhanu, who's our co-founder and CEO, so he had interacted with the client and he was telling him how he had to buy a critical illness rider. Customer was very skeptical. He was like, look, I'm here to buy a death, term policy and you're upselling all of this. I thought you were better than this, etc. And they had a conversation regarding that. But Bhanu is a big proponent of critical illness. He's like, look, loss of income can be detrimental. You buy. Eventually, customer considered and bought a 20 lakh or 30 lakh critical illness rider.
Right.
3 years later, unfortunately, there were a series of, tragic events in the customer's life. And unfortunately, yes, they suffered a massive heart attack.
Okay.
Now they had to do a bypass surgery. Critical illness mein bypass surgeries are covered. Again, right, there was, I think, around 20-30 lakhs, is on the line here.
Right.
Insurance company will commit its investigation because this is within the 3-year moratorium period.
Right.
Investigation begins. Okay, customer is very, very, very receptive. Okay, because some customers also, they don't want to like, kitni baar report. Yeah, exactly. Kitna document, right? Again and again. I don't want to do this, right? But customer was, we worked with us, very, very good customer. We also worked with them. We went to the insurance company. We made sure that there are no issues. But then there was a small issue, right? During the surgery, they realized that this gentleman was taking tablets related to diabetes. Okay, right? Diabetes control care. So they're like, oh, they had diabetes.
The declaration.
Yeah, where is the declaration for diabetes? Nahi, why is eating diabetes ka tablet? And then we realized it was given as a precautionary measure. We have to get the treating doctor's report. Then another round of investigation is triggered to see if the treating doctor is lying or if there is any, collusion there. Right. And ultimately, at some point, the customer is tired, right? They're like, ho gaya, bus, right? And then we have to then go and negotiate with the insurance company. We had to put our foot down and say, ki, yaar, kitni documents, right? Any document you need, we'll go with the treating doctor and we'll sort of, we'll finish it within the week, right? Done. Right? Eventually, the claim is processed, believe it or not, after close to, I think, 18 days.
Okay.
Right? So, takes 18 days for a critical illness claim to go through. And as a customer, after you've suffered a surgery, etc., after you've gone through a surgery, can be very, very tight.
The last thing in the mind,
Last thing in the mind. And so this is where an agent comes in picture. That's why I said, doesn't have to be Ditto. Yes, Ditto can use its scale, bully insurance companies. We can sit in some cases even with the team.
Right.
Claims team, figure out exactly why you denied and we can fight. Maybe your agent can't do it, but still an agent is better than no agent. Right. So insurance is one of those few products where agents really do have a role to play.
Correct.
Right. And it's better to probably work with them than having to work with the insurance company, because if they simply write an email saying ki reject, you don't know what to do.
Right.
Even if you have to go to the Ombudsman, just going to the Ombudsman, Shankar, is a pain. For instance, even if I know I've been, I've been sort of probably mistreated by the insurance company, just going to the Ombudsman, first I have to write a mail to the grievance cell. Grievance cell will then send its report. If the report is not satisfactory, then I can go to the Ombudsman.
So grievance cell is the insurer.
Okay. It's the insurer. Okay. And insurance company, rarely they...
Going to just...
exactly. It's just...
okay.
It's
noted, but...
Ho gaya. You go to the Ombudsman. Ombudsman, they know. And most times what happens is once you go to the Ombudsman, you'll probably get a favorable verdict. Not because, you can argue your case. It's because the insurance company only doesn't want to argue the case. They will submit even before they... It's just to see whether you go to the Ombudsman, whether you have the know-how to put the documentation together to actually petition your case with the Ombudsman. And once you have the know-how, you have to petition with the Ombudsman. Ombudsman sometimes doesn't reply. So even we, for instance, work with specialized companies. We work with the Insurance Samadhan, for instance, right, which is a Shark Tank company. I'm sure you've heard of them as well. Yes. They specialize in this.
Correct.
We know exactly how to represent, the customer's case, and then we go to the Ombudsman, right? And obviously, we can't represent the client, but we can tell customers, we can coach clients, to say exactly, this is how you should defend your case.
Right.
Where is it in the document, right? What have you done, etc. And so this becomes an extremely taxing journey for a customer if you don't have the know-how. I mean, very specialized skill and very specialized processes. And so it's always better to have somebody who knows how to deal with such cases, right?
So basically, before buying term insurance, figure out all the claim-related scenarios.
Exactly,
that's
right? It's and again, right? Make sure that you have somebody on your side to petition your case, right? If there's nobody around, yeah. So that's very important.
Makes sense.
Yeah.
So Shrehith, one of the most common questions, and I've received like so many times, is on this smoking thing.
Correct.
So generally, when a smoker comes in, one of the first questions he asks me is, "Can I lie on my application?"
Correct.
How will the company even know about something like that?
Yeah.
I know you'll never recommend please lie on the application, but people do ask this question quite a bit. Okay, so what can be done? Is there a solution where a smoker, let's say 5 years later, he becomes a non-smoker?
Yeah.
And there's a parallel question, right? The non-smoker also saying that what if I become a smoker after 5 years, for example?
Correct.
Is there some solution around it, or is there some insights there?
Yeah. So that's a very interesting question. So let me take the second half of the question first, right? What if you are a smoker, you've declared it, and at some point you quit smoking, right? You're paying higher premiums. Will you then get a rebate or probably a discount, anything, right? Unfortunately, this doesn't happen, right? Once you're a smoker, you've declared as such in your proposal form and you start paying the higher premiums, you'll have to continue paying the higher premiums. Now, some people come by, that doesn't seem very fair. But the counter example to that is, let's suppose you're not a smoker and you declare as such. you're not a smoker, you've declared I'm not a smoker in the policy, you get the lower premiums. And then you pay the, lower premium. 3 years later, you're hanging out with your friends, etc. Kuch ho gaya, you start smoking, right?
And that picture comes on Facebook.
Correct. Picture comes on Facebook also. Okay. And now the insurance company can't go back and revise your premiums also. So the insurance company doesn't do it for this case where you were a non-smoker but you started smoking and there is no added premiums. So they're saying that if you are a smoker and then you don't smoke, I'm not going to go back on it. Right? So there is no rebate as such. Now the second half of the question, can you actually lie? Because obviously the difference in premiums for a smoker and non-smoker can be substantial. Right? In some cases it can go up to exactly almost double. Right? And suddenly you're thinking, why would I pay this much? Right? So there are two ways to go about it. The best way, the most straightforward way is to quit smoking, which I know seems like an absurd suggestion, but we have seen some people, right? We tell people ki aap smoker ho abhi. How about you quit smoking? You come back after maybe a year and you buy the policy there, right?
Is that a year's gap?
Usually, yes. Usually they'll ask the questions very specific to that extent. They'll say, have you smoked in the last 12 months? Or some cases they may even say 24 months, depends on the provider, right? Usually they say after 1 year, it's okay. If you've not smoked and if you quit smoking, it's fair enough, right? And some people actually quit smoking, right? Maybe they're occasional smokers. They're not chain smokers, etc. And then they buy the policy and it's a great change for your health, okay?
Correct.
Your body will thank you. Your finances will thank you. Everything is great, amazing. There's a second category where some people will say, I occasionally smoke karta hu. I don't smoke that much also. So I don't want to declare it as such, which is a fair assessment, may say. Maybe you smoked, once in a month or once in 2 months you smoke occasionally and you don't want to declare it, right? The question is, what will happen? What's the maximum that will happen? Let me talk about the worst case scenario. A worst case scenario is that you do not declare it. You fill in the application, you pay your premiums. 6 months later, or at least when you're paying the premium, first they'll do the medical test. Right. Abhi medical test mein, if they commission, in the blood test, they also test for nicotine.
Correct.
If they find nicotine, and sometimes they can find, right, nicotine, even if you smoked, say, 15 days, 20 days earlier, right, it is possible, it can come up. If they find, okay, they will cancel your application and you will not get the term insurance policy issued. But that's not the worst thing. The worst thing is that next time you go try buy a policy from anywhere, they will look at you as a defaulter because you now have lied in the policy and this information is generally shared with multiple insurance companies through a common bureau.
Oh, okay.
So now what happens is that you can be blacklisted for life. You may never get a term insurance policy. So you thought it was an honest mistake, or maybe you are like, zyada din
chala denge.
nahi hoga. But this can be really detrimental because you may never get a term insurance policy issued because you've lied once.
Right.
Lying once is a cardinal sin, and lying second, you won't even get the opportunity.
Correct.
Right? In some other cases, what can happen is, let's suppose, once you buy a policy, we've also seen cases very, very rarely. What happens is you've gotten the policy issued, and after 6 months, you get an email from the insurance company saying that we are going to cancel your policy on the account of non-declaration. Okay? They will not specify exactly what non-declaration is, but they'll cancel the policy, but they'll have enough evidence to back up the claim that you lied in your proposal form. Now, how can the insurance company find out you've lied in your proposal form, something like this? So, usually what tends to happen is just because you bought a policy doesn't mean that insurance companies will stop investigating everything related to your policy. They have a 3-year moratorium period. 3 years they can continue to investigate. They can try and see if you've not, if there's any instances of non-declaration, if there's any documents that they can access through common bureaus, through channels that shows that you've smoked in the past, etc. Or even if they find evidence on your social media, for instance. Aapka pictures hai.
But who does so much of work?
That's the thing. Sometimes they do. Right? We've seen cases right, where they do, and we've seen, it's very rarely though, right? But it can happen. And once it happens again, policy cancels, right? And usually this doesn't happen with smoking status, but it happens with health declarations, right? Maybe you lied about something and somehow.
Or something like
correct. And insurance companies don't tell you exactly how they got to.
Okay.
That is a secret, right? Because they don't want to then, let out the secret.
Correct.
But once they do it, they can cancel the policy, as this has happened. So you paid the premiums, you've lost that money, you've lost the policy, and you have no scope for disputing also, because if you go to dispute the claim or dispute the matter, with the Ombudsman, they'll share the details. And then you will have to bear the time, cost associated with actually filing the grievance, and nothing will come of it, right? So the best way to go about this is to be honest in your declaration and not assume that the insurance company cannot find out. The last case that can happen is that you do not disclose, the insurance company doesn't find out, Unfortunately, you pass away and the claim comes up for investigation and there they find evidence of nicotine consumption.
Right.
Then if they can establish a clear pattern or a case where they show, for instance, lung cancer, right? Ab lung cancer ke case mein, by and large, it's very hard to attribute exactly what was the cause for lung cancer.
Okay.
But in some cases, insurers can build a very credible case that this was because of an excessive smoking habit. If you're a chain smoker, for instance, right, your body leaves markers, right? And if they can establish a case on these grounds, they can then deny paying out the claim, void the policy, so you paid the premium, so beneficiaries don't get the benefit, right? And nothing comes of it, right? Because you've lied in your proposal form. So if you are a smoker, by and large, the best recourse is to either quit smoking or be honest in your declaration and state that you've smoked, at least if you've smoked in the last 12 months, so that no issue comes up eventually when you have to make a claim.
Understood.
Yeah.
But okay, this was smoking.
Yeah.
And you kind of hinted on that pre-existing part as well.
Correct.
Let's say I have hypertension, diabetes.
Yeah.
Can I get a term insurance plan? Number one.
Correct.
B, is there a loading that happens on it or stuff like?
Yes.
And thirdly, are there cases where it's like totally rejected or it's accepted with some exclusions or conditions, etc.?
Yeah. So this is a very interesting question, Shankar, in the sense that a lot of times people do not disclose something, not necessarily because they're trying to hide condition.
Correct.
It's because they didn't think it was significant enough to even disclose it, right? So you have to make sure that when you're going and writing, filling out the proposal form, you have to disclose everything that you know, right? So long as it's related to a health condition, right? Now, let's suppose you've disclosed it. Let's suppose you have hypertension. You're currently on medication. You've disclosed it. The question is, will there be an extra charge that will be imposed, loading, right? Once you buy the policy, and that is true, right? Yes, you will get a policy. Most companies will issue a policy unless your hypertension is so bad that insurance thinks it's too risky, right, to insure you, right?
Right.
But otherwise, in most cases, you will get the policy issued. Unless you have a rare condition, a serious medical condition, you will get the policy issued. The only condition is that you will have to pay extra. And the reason you have to pay extra is because the pricing that was decided was basis the assumption that you're fit and fine, right? And if you're fit and fine, this is the pricing. But if you're not fit and fine, then ultimately I'll have to charge an extra because, well, the pricing was decided based on some predefined characteristics which you do not meet currently, right?
So as compared to, let's say, a health plan.
Correct.
Now, let's say the same guy goes for a term plan and for a health plan.
Correct.
Where does he have a higher chance? Will the term plan has a higher chance of getting issued or the health plan?
Health plan, 100%, right? Because health plan pay, the insurance company doesn't have to pay a significant chunk of money. I get the fact that 10 lakh ka policy hai, but zyadatar jo claims aate, 2 lakhs, 3 lakhs maximum, right? That is the median claim that they have to do.
So if I have diabetes, can I go there?
Correct.
I have a higher chance of getting a health plan as compared to a term plan?
100%.
Yes,
that is true. Because with term, the payouts are so massive, the risk is so excessive that the insurance company wants to be 100% sure that you're insurable, right?
Okay.
Whereas with health, they can increase your premiums, right? Obviously according to inflation, not necessarily because you made a claim, age bands, etc. But
they create a separate plan for diabetes.
Correct, diabetes, etc. So they have more room for maneuvering, right? I mean, term, there's nothing. Once the premium is fixed, you pay that premium. And if the person passes away, then the liability is on the insurance company to pay out a massive sum, right? So
what does a poor diabetic guy do with respect to term insurance? Are there options?
Yeah, it can be very challenging. So what tends to happen sometimes is clients come to us, some adverse, remarks on their medical reports.
Correct.
And one of two things will happen. The application will be rejected or they will be told to come back after 6 months. Basically, it's like, look, I'm not ruling on this right now. Maybe I will rule on it again after 6 months. We'll check the markers again. We'll see if there are improvements and then I will decide. Right? Or the policy is accepted, right? With some conditions in some cases. Now, in some cases, what happens is this gentleman, I remember recently, he was recommended a treadmill test.
Okay.
Right? Ab treadmill test kiya, okay, there were some adverse remarks in the report. Gentleman says, I'm very healthy, right? So now what can you do, right? Because the treadmill test shows that there is some aberration. Insurance company has rejected your application, they even refunded. Right? So in such cases where the customer is adamant, what we do sometimes is we tell the customer, we can get a test, commissioned on his own expense, right? And we can try and see if it tallies up with the results of the insurer. Because sometimes you have faulty equipment on the insurer side.
It's like a second opinion kind of a thing.
Exactly, second opinion, because they commission third party companies to do these tests. वहाँ पे यार, everything is sticking out. Okay, the problem with the equipment, nothing is proper. So we try and or at least persuade the customer to get another report, right? And then we use that report to petition the insurance company and see if we can get the application reconsidered again. So this is something that an agent can do if they can work with the insurance company, right? But this is again exceptional case.
The chances थोड़ा कम ही लग रहा है.
कम ही लग रहा है, but क्योंकि ज़्यादातर यार tests will be accurate only, right?
Correct.
Rare cases पे जब lipid profiles are crazy, maybe 6 months back the gentleman has tested,
right?
And there's nothing wrong, and suddenly the lipid profile spikes up, and then you have to get these tests done. You want to get these tests done, and then you use that data to petition the insurance company, and you can get that reversed.
Right.
But otherwise, it's very hard, right? It's very hard to sort of convince the insurance company to sort of reconsider.
So, is there a alternate product? I mean, let's look at the larger picture. So, is there a ULIP that this guy can buy because there are relaxed medical norms or traditional plans? I mean, is there an alternative for this?
I mean, there are, but once again, I mean, if you're buying the ULIP, even if you're sort of paying 1 lakh in premiums, the sum insured is only going to be 10 lakh.
Yeah,
it's not going to be substantial.
Yeah, it's not going
right?
to be.
So once the sum assured reaches the 50 lakh mark,
right,
the insurance company will want me.
Okay, that is
it devolves into a term insurance product only, in the sense that the medical test will be as rigorous, if not more rigorous, right?
Yes.
So you do not, unfortunately, have sort of an alternate method here.
Yeah.
The only method that exists, one thing that we do is sometimes the risk appetites for insurers vary considerably, because insurance companies work with different reinsurers. They have their own insurance companies.
Exactly.
And so they'll have their own standards. They may reject a policy. So we have internal metrics to see if there is a chance that other insurance company will reconsider it, right? So even with some partners that we don't work with, right? So if we have some data saying that, like these partners could sometimes issue a policy for these conditions, we will ask the customer to go there. Or if there are partners that we work with, we try and seek opinions, right? Soft approach we do, right? Where because once you fill in the application, you have to declare everything. You have to fill in everything, and then that gets to the bureau.
Right.
We don't want all of that nonsense, right? So sometimes soft approach, we seek, is it possible? And then we'll say, maybe you can apply, and then you have to risk it, right?
Right.
And then, sometimes customer says, okay, we try, with the application, it works. Sometimes it doesn't. So
very helpful.
Yeah.
Related to this.
Right.
Now, what happens if I am absolutely fine?
Yeah.
I've received that policy. It's everything issued. 5 years are up.
Correct.
Okay. And suddenly something is happening now. Let's say hair fall is happening, or some illnesses suddenly come in. Do I need to declare that?
Right. Okay.
To be sure.
Yeah. So this is an excellent question. So there is no explicit mandate.
Okay.
There are sort of, again, there are words in the policy document that states that it is best to do this as good practice, but there is no mandate on the customer to keep the insurance company abreast of any health developments, right? However, what we've learned, in our opinion, is that it's best to do so simply because any cases of rejection can later be disputed once the insurer acknowledges this condition.
Yeah, but this is a perpetual rule, or is it in the first 3 years that you recommended it, and after 3 years once the moratorium is over?
After 3 years, I don't think it's recommended. But even then, remember I told that the exception is cases of fraud. Yes, right?
Yeah.
And fraud, it's not clearly defined. There's no clear definition. The bar is not set, right?
Understood.
So yes, the onus is on the insurance company to prove that there is fraud. But then we've seen insurance companies defy the moratorium period clause and then go to the courts directly.
But non-disclosure after 5 years, why would it be called fraud?
No, so basically they're saying that willfully you've lied on the proposal form, which is material fraud, in some sense. Like you can make that argument, or at least we've seen insurance companies make that argument in court.
Oh, okay.
Right. So what we've seen is, so what happens is the regulator is very clear. You have to pay out. But the recourse for the insurance company isn't just the Ombudsperson, right? As it is for customers. We can approach the consumer courts. We can approach, the district courts, the high courts. We can go all the way to Supreme Court as well. Right. So that mechanism, that route is available for insurance companies as well. So if they really want to dispute it, they can do it, and that can last years.
This is painful, man, because the insurance contract, the term insurance contract, 30 years.
Yes.
In 30 years, I'm going to have like multiple complications,
Exactly.
right?
Which is precisely why it is always best to keep insurers abreast of any development. So that's what I was getting at, right? So one case...
I might end up writing a letter to them every 3-4 years, something
happens to me. It's just a mail. So for instance, if you're working with Ditto, for instance, I can give you a use case. It didn't happen with term, it happened with health.
Okay.
So this gentleman had bought a policy, and this is an early claim, what we call, where he had to make a claim after 6 months, right? And it was a cancer-related claim. However, 3 months later, this gentleman had noted, he had sent an email to us stating that, look, I had some pain in my chest. I went to the doctor. Chest, I don't remember, it was chest or stomach, right? He went to the doctors and...
The diagnosis has come out.
Yes, the diagnosis has come out saying, no, it was a provisional diagnosis stating that one protein marker, which is generally found in cancer patients, is very high. So they had said that they're doing a bit of tests, and then eventually the MRI scans, PET scans didn't show anything, I believe. But what he ended up doing was he sent the disclosure to us, and so we nudged him again, right, to mark us in CC and send it to the insurance company, right? So we sought an acknowledgement of the insurance company. The insurance company did not write back. We sought an acknowledgement. The insurance company said, I acknowledge this.
Okay.
After about 4 months again, right, this gentleman was actually diagnosed with cancer.
And then the claims process started.
The claims process started. The cashless claim was initially rejected, saying that we want to investigate this claim because we suspect this to be a case of pre-existing condition. Now, what we did was we went back to the acknowledgement form. We used that acknowledgement form and we said, ki, aapne to acknowledgement to de diya.
Right.
Ki, this person had CA markers. He had said, ki, so how can this be a pre-existing case now? So your investigation is fraudulent now.
Right.
You're just delaying this.
Right.
And the claim was approved.
Oh, nice.
So this is what we can do then. We can use this as evidence, then bat for the customer, right? So that is why we tell customers, if this is a serious case, you trip and fall and you have a sprain in the leg, there's no need of insurance, right? But if there's something serious, heart surgery, this, even if a corporate insurance pays out, let's suppose a lot of people have employee insurance and they don't want to go, to the hassle of waiting periods, etc.
Right.
So they say, with health at least, right?
Correct.
So they say, okay, I'm going to, let go of this. I'm going to use my, corporate policy, right? And then they forget to inform the insurance company, right? The retail product, right? The personal provider. And usually what happens is then again the investigations get triggered saying, aapko to ye condition tha. So let me check. So, but if that acknowledgement was received, I can then dispute and I can get a cashless claim approved. So this happens with term as well, right? Declarations really help us build a case eventually if there are disputes. Ab non-declaration, if they say I have to investigate this matter, I can say to acknowledgement to hai.
Right.
How can you investigate again, right?
Yeah, I don't know. It's a good example.
So that's what we do. Yeah.
Right.
Yeah.
So Shrehith, this is a question that comes in often. Very simple question. So this gentleman here is asking that I am seeking a 10 crore term plan.
Okay.
And should I break it up into 5 different policies of 2 crores each and buy it?
Okay.
Before you answer that, my initial assessment was that, why do you want to go through this trouble of 5 different renewal dates, 5 different medical tests and applications and all that stuff? Would love to know your opinion.
Yeah, absolutely doesn't make any sense. Obviously, first part is, what you pointed out. I mean, just the operational issues involved in getting a policy issued, right, can take up to 15 days, medical tests, right, other documentation support, everything, right?
Right.
It's a pain. I think after the first 2 policies only, you'll say, give 4 crore, I'll make do with, right? Or you'll say, okay, next policy I'm going to buy for 6 crores, right? It's going to end there. But the bigger problem is that even if you think that this is a good method to diversify, unfortunately, that is not how term insurance policies work. If somebody rejects your claim, the other 4 people also will reject your claim. Basis that one
bureau that you...
Exactly, right? So they will have some information. And if they built a case on their own, right, they will make sure that the other insurance companies will make sure, first of all, they'll know. Every insurance companies will ask you if you have other plans and you have to declare it.
Right.
Once they know that you have other plans, if they have to process a claim, they'll go to that provider and they'll check. Right, what are you doing, etc. They will have ways to sort of make sure that they do not pass a frivolous claim. So it's not like you're diversifying, because if one rejects, everybody will reject.
Right.
Right. If one approves, maybe the likelihood of approval for everybody else also increases. But then the point is, if I have only one provider, ek approval hi kafi hai na.
Correct.
Right. So it doesn't matter. Right. I think from that perspective, yes, I don't think there's any benefit. If anything, there is only downsides that I can see in doing something like this.
So here's another question. So someone is asking, should I opt for a zero cost term insurance? What's the zero cost term insurance?
Right. So it's one of the better marketing innovations of the insurance companies. So a zero cost term plan basically promises this. What they're saying is, you buy a policy today, you keep it for another 30, 35, 40, 45 years. Okay. And at some point, when you realize that you may no longer need the term plan, you can return the policy or surrender the policy, and we will pay all the premiums back, excluding GST. Right?
Okay.
So effectively, in some sense, you could argue that if they return all the premiums, I have not paid anything, and therefore it's zero cost. Unfortunately, that's not entirely true. If you're buying the policy, especially if you're 30, 35-year-old and you're buying the policy, and you're buying a zero cost plan, they will say that you can only surrender your policy after the 35th year or the 40th year.
Okay.
Right? So then you have to keep the policy till 40th year, even if you don't need the policy till then.
Okay.
It's possible that you could have kept the cover only until 60. But now, because you want to apply for a zero cost plan, you're buying a policy till 70.
And I have to keep it till the age of 60.
No, you have to keep it till the age of 70. So they say minimum you have to buy the policy so long as it's covered for at least 30, 35 years.
Understood.
Right? So at the age of 35, if I buy a policy, then I have to keep it till 70.
Right.
Right? So that's, generally the person could have retired at 60, and we are saying the cover is enough till 60.
Correct.
Right? But now, because of the promise of zero cost plan, I'm buying a policy till 70. So you're losing money. Now you're paying higher premiums.
No, but if I'm going to keep it till 70,
correct,
the chances of me expiring after 70 is actually on the higher side, right?
Yes.
It's better for me to just continue with that policy.
Correct. Exactly. So and the bigger issue with zero cost is that it's not necessarily zero cost.
Right.
At the age of 70, if you're getting your premiums back, inflation will have eaten. It's not worth much, right? So, I mean, it maybe makes sense for you to buy a zero cost plan if you're really young, and if you're planning to keep the policy till 60, 65, and if you want that provision, right, at the age of 60 to surrender your plan. But in most cases, I don't think you should be in that position, right? Your policy expires, I mean, a few thousand rupees, right, that too excluding of GST, will not make a massive dent on your income anyways, because inflation will have eaten away most of it anyway.
But the premium you said, the X premium that you said,
yes,
is that higher for a...
No, it's the same. It's the same. So there is another policy called as return of premium plans, where they promise to return all your premiums after the policy expires, right? So basically, you had the policy till the age of 60.
Right.
The policy expires, and then you get,
money back.
Yes, you get the money back. Here, the premiums are much more, right, than a regular plan, right? Which also doesn't make a lot of sense, right? Because if you account for that extra premium, if you set it aside,
correct,
probably do an SIP on that, you'll probably still do better. So it doesn't make a lot of sense.
But on a case-to-case basis,
the
zero cost variant is better than the return.
It's better than the return of premium plans. It's just that you will still have to surrender the plan when you may need it, by the way, right?
Correct.
Which is not ideal, right? Perhaps doesn't make sense as well, right? So it's a marketing gimmick, I think, right?
A very interesting question.
Okay.
Who can claim the insured money in case both the insured person and the nominee passes?
Right. So there's a matrix there, right? So they'll usually have a nominee matrix saying who's the next kith, who's the next kin, and there's actually a structure in place, right? Okay. Maybe we can probably show the matrix to the users so that they're better aware. But yes, there's a scheme of things so that any beneficiary, right, beyond the nominees can also claim based on a predefined matrix, right? So there shouldn't be a problem for any individuals, right, who are trying to make a claim and thinking, the nominee has passed away, doesn't mean we can't claim. We can claim. It's just that they have to be intimated that there is a term policy in force, and they have to know that they can reach out to the agent or the insurance company to make a claim. So yes, there's a clear matrix in place.
So beyond the nominee, those other guys should also know that there is a policy.
That there is a policy in place, right? So which is why when we sort of sell policies to people, we clearly recommend people that they share it with not just the nominee, but beyond the nominees, other kith and kin, right? So that they know exactly when they can sort of claim a policy. So yes, so it's fairly straightforward, and it shouldn't be challenging as such.
Nice. So another very common question that's there is when you buy a policy, probably I can share my experience. So I bought my first term plan at the age of 30.
Okay.
So it was a good 14 years back. There were hardly any policies available. at that time you can't buy more than 60 years of tenure.
Correct.
So it was like early stages of term insurance buying. And one of the questions I obviously had at that time also is that, hey, you are offering me, because the salary was low, I could get a 2 crore plan at that time.
Got it.
But over time, my responsibilities increased, my salary also increased. Could I have done a top-up on the same policy, or do I have to buy a separate policy? I mean, how does that work?
Yeah, so some policies do offer you the provision to top up a plan, although the top-up is strictly limited, right?
Okay.
In the sense that they'll say that you can only top up your policy up to 1 crore, or say 50% of your sum assured, or there are other metrics that they will define prior to you buying the policy only. They'll say that this much is the maximum value that you can top up.
Is that the life stage thing where...
Yes. So there's the life stage benefit, which essentially means that during significant life events, you can top up your cover by...
marriage and children.
Children, certain X amount. And then there's a voluntary top up.
Okay.
Where you can just go, even if there isn't a life event, you can probably tell the insurance company that you're willing to top up. They'll offer you provision to slightly top up your policy based on some predefined metrics, right? Now, during this top up again, right, it's not as if it's a blanket top up when they'll just say you have to do the medicals again.
Oh.
Right? You will have to make sure that you have to pay the extra premium. So everything is the same. But the only provision is that, the only benefit is that you have the provision at least. Right? You don't have to fill the application form again. You don't have to go through the entire process again. So that's one benefit. However, in most cases, people will want to top up their policy by a higher margin. Right? So, for instance, in your case, you probably wanted to top it up by, say, another
2 crore.
Yes, exactly. So then the only option you will have is to buy a separate term plan.
Okay.
Right? So you'll have to buy a separate term plan and go down that route. Right? So both provisions are available, although in the case of top-ups, it's restricted, whereas with buying a new term plan, it's probably not as restricted. Right?
And would you say you buy the second policy from the same insurer, or do you explore a different insurer that's better, or
I mean again, right,
go through the entire same process, the selection process that you explained?
Yeah. So you could do that, right, where you say, I'm going to go to another provider. Although I did also claim that there's no real benefit in diversifying this way.
Correct.
So if I still like the provider that I'm with, I would probably go to the same provider and buy a policy from them, right? Because you have an existing relationship, it's likely that your policy will be issued on a faster basis, simply because they have all the data points that they probably need from you, right? They have some data that they've collated over the years. They've seen that you've been with the company, and it's likely that your policy will be issued much quicker. And also the claim process shouldn't be as much of a hassle because you already have an existing relationship with the insurance company.
Right.
So I'd say that a better approach is to simply buy a term plan from the same provider as opposed to going to a different provider.
Got it. Right. Another common question that comes up is with respect to the non-resident Indians.
Okay.
And then there are multiple variations here.
Yes.
So someone's asking me something like, if I move outside of India, will the terms of the term insurance, will it still hold? As in, if I expire outside of India, will the Indian company still pay me money? That's question number one.
Yes.
Are there any exclusions to this that they might not pay me money for XYZ reasons?
Yeah.
Also, if an NRI wants, and he's, let's say, outside of India, can he purchase a term insurance because he wants to come back to India in a couple of years?
Yes.
So can he purchase the policy now?
Yeah. So on the first question, what if you buy a policy today in India, you go abroad and something happens to you there? Doesn't matter, right? So long as it is not part of the exclusion list, the insurance company will pay out, right? So what is the exclusion list per se? Cases of suicide within the first year, right? And then there are some rare cases, right, where if you were involved in criminal activity, right, offenses, etc., then there can be disputes. Or if you were participating in terrorist activities, I mean, that's a disputed matter as well. So there could be provisions, right, where your claim could be denied basis this fact. But no, otherwise there's no problem. Your claim will be approved, right? Now, for NRIs outside India, who are already staying outside India, first is what happens, right? Can they buy a term insurance policy with a provider in India, or what is a better approach? Generally, they can do that, right? The only issue sometimes is related to the medicals because they have to get a medicals commissioned in the place of residence, which is usually outside India, and that can be challenging, right, at times. Some insurers offer you the provision to get your medicals done at your own cost. Other insurers will figure out some midway where they'll say that there are some partners, we will bear some cost, sometimes we will not bear the cost. Again, it's dependent on specific insurers
And then there are cases where they'll tell you the best approach is to come to India. When you're in India, get the medical test done, submit all your documents, and then you go back, right? So you can then get the medical test done in India at the insurer's cost, and you don't have to worry. So when we work with NRI clients, we tell them that, usually if you're coming back to India, a better approach is to buy the policy there, right? So that they can get the medical test done in India. And if there are any, hiccups, niggling issues where you have to follow up tests, etc., you don't have to pay for costs. And costs outside India can be, very expensive sometimes, right? So while some providers will bear the cost, others won't. So it's dependent on the provider, the country of residence also, and then the network partner that the insurer provider has there. Or in most cases, when you come to India, it's much easier to do it here, right?
It's better to get the clarification before you go in for the test.
Correct.
That will you bear the cost?
Correct. It's better to do that, right? And in most cases, they will tell you that they will not bear the cost because it can be very expensive,
right?
But yes, we have to check with the insurer, and we'll have to make sure that there's a clear provision for you to, and it depends on the sum insured as well, right? So yeah, in some cases maybe they can waive the medical test as well. So it will depend on specific situations, right? So we'll have to see how that pans out. Yeah.
Also on the foreign domicile, as I recall, there are some countries which are probably excluded, right? So maybe Afghanistan, Yemen, Syria. If a person expires there, then is it like, they don't pay the claim?
Yeah, so technically there is nothing in the term insurance policy document that excludes death, even if it happens in war-torn areas, say Syria, Yemen, etc. However, it can get increasingly complicated for you to procure a claim because now you probably need death certificates both from the Indian government and maybe the government where you're residing.
Government.
Exactly. What happens if
there's no government?
There's no government. There's just rebels right now.
Right.
So then it can be challenging. Exactly the circumstances of death, what happened, and so it can get problematic. So yes, if you're traveling to such sensitive areas, maybe it's better to again discuss with insurance companies or even with Ditto, for instance, and we can figure things out. But no, there is no explicit bar, excluding you saying, okay, we will not pay out the claim. Now, another interesting case, however, is what if you go missing? Let's suppose you're in the US, UK, anywhere, and then you go missing.
Okay.
So there's nothing.
Possible,
right? Exactly, right? Then it can get very challenging because what the IRDAI provisions state is that if you go missing, then there has to be an FIR, that you have gone missing. And after 7 years of you have gone missing and not returning, right? You can then use that FIR to go to the courts and essentially get some document that state that you presumed it, right? And then you can petition the insurance company to process a claim, right? And so that can then be used as evidence to sort of procure a claim, etc. And this can work with, the foreign governments as well.
Right.
You have to get FIR done there. You have to go through the same, procedure, 7 years. You go to the courts in India, you get, you basically declare him dead because he's an Indian citizen.
Right.
And then you can get the, claim processed, right? However, in certain cases, like in the case of MH370, for instance, the plane, again, the plane can't survive.
Correct.
And it's probably somewhere in the Indian Ocean, and the government officially declares that, we assume that these people are dead. Then the insurance companies at their own discretion can pay out the claims assuming that these people are dead, right? So during MH370 disaster
declaration that comes, right?
Insurance companies only went out and said, we are paying out the claims for everyone, right? In some cases, it may not be as straightforward, right? Where you don't know if he's dead or not.
Right.
Another question is, what if you're presumed dead and then 7 years and you turn up after 12 years? What then? Can the insurance company plow back the money? Yes, they can, right? In which case you have to be careful, right? Before making a declaration that you're dead, etc. So yes, they can, but in most cases they don't do it. They're like, they'll do their investigation.
Right.
And if they feel like this person is dead, then, it's most likely that they're dead. So yeah, some such cases can crop up.
Interesting, huh? All these
Yeah.
Shrehith, another question that especially the defense folks would ask, police officers, soldiers, etc., is that, how easy or how difficult is it for them to get a term insurance policy?
Yeah, unfortunately, if there's any risk to life, as if you're serving in the front lines, if you are a police officer, in active duty, unfortunately, the likelihood of an insurance company actually covering you diminishes rather significantly. We've never seen an insurance company, they don't explicitly say it, but they don't cover, right? They don't cover them, and they usually the application is straight reject. They'll even tell you don't file the application, right? So usually they don't. And the insurance company's explanation is very simple. it's too risky a proposition, right? We'll never make money. We'll have to subsidize it somewhere else, right? We have to probably increase the premium for other folks, right? Which also doesn't seem as fair, for instance. So yes, for them, there's no provision. However, we have seen that even if you are in the defense department and you're in an admin role, where the risk to life, again, right, is substantially low, right, or negligent, right, negligible, sorry. In which case, then insurance company can consider your application, and you will get the policy issued. The only challenge is sometimes if you are not in a salaried role and you're in a contractual position, then it can be slightly hard because you have to rely on ITRs, proofs, etc. to establish your income potential, right? So the documentation requirements can be slightly cumbersome, but yes, beyond that, there is no difficulty for admin folks per se, right? Even if you're in the defense sector, etc. So yeah, that's sort of the distinction there.
Makes sense.
Yeah.
You also mentioned an increase in the premium. No, I'm not talking about the loading part, but
Yes.
Over the last 3-4 years, it seems the term insurance guys have been increasing their premium.
Yeah.
Is that a very common thing, or is there a particular reason why it's kind of spiked up over the last 2, 3, 4 years?
Yeah. So if you ask the insurance companies why the premiums are going up, they'll tell you that COVID, and actually they won't say COVID, they'll say our reinsurers are charging us higher.
Right.
So what do you want me to do? If I am being asked to pay a higher premium, I'll ask you to pay a higher premium. It's as simple. If you go to the reinsurers, they'll say COVID.
Correct.
Right? Because yes, COVID was an exceptional sort of situation, and all the models that we had in place accounted for probably circumstances that you expect to happen, right? COVID was such a black swan event that nobody expected it to happen, and the models suddenly threw up, numbers that they weren't expecting, and now you have to compensate for the added sort of, mortality cases that accrued because of COVID. And so now they're going back and revisiting their models. They're realizing that maybe they have to charge higher premiums. So yes, by and large, the premium revisions have happened because of COVID. But another reason why this could happen is because IRDAI, for instance, wants to make policies more customer friendly, right? They want to remove exclusions. They don't want, if you die in Yemen, I shouldn't be in a position where I'm denying a claim. But there is a cost associated with that for the insurance company. And so they have to constantly revise their risk models based on evolving regulations. And then they have to go back and say, okay, maybe our models were slightly dubious. Right? Now we have to, the margins for safety is no longer there. Right. We have to bump up our premiums, right? So the models keep changing. And so yes, evolving guidelines, etc., have also forced insurance companies to then go back and say, okay, maybe we have to bump up our premiums. But these are the two big reasons, right?
But now that the COVID wave is over and there's a normalization that's happening, is there any chance, that the premiums might
now increase?
Yeah.
Rarely do we see that.
Yeah.
But yes, for some profiles, right, we have seen minor revisions, right, where they say only if somebody is buying a policy between 1 to 1.5 crores, between this age bracket with this income, maybe I can introduce a new product with a slightly lower premium.
They've gotten better. They have the cohorts which have said that probably this is a better profile.
Correct. So for some profiles, they do charge, there is some price discrimination. And so you do get better rates, but it happens in small pockets. Right? Generally, the price goes up, which is one of the reasons why if you're considering a term plan, we do this user research. We go to people and they're like, why you're considering a term plan? Why haven't you bought it yet? Yeah. It's not urgent. I'll probably buy it next year, right? And the issue that crops up is if you lock in the price today, obviously it's much better because then you don't have to pay a higher premium constantly for life. Some could also make the argument that, okay, but then I don't pay the premium this year, right?
Correct.
That's savings for me.
Exactly.
You can do the math there, right? But then you also get the added protection for that 1 year. Something happens to you, right? So if you weigh in the added protection versus the cost savings that you accrue because of lower premiums, I think it always makes sense to buy a term policy when you're younger, right? So that's what I think of.
Yeah, I was checking my own bump up in price. So instead of buying it at 44, if I buy it at 45, that bump up is almost 4%.
Yeah.
So it's a big number.
And especially during the last 3 years, people have seen their premiums double almost. In fact, just recently a customer was telling us he was looking to top up his plan, right?
Okay.
And then he's seen that premiums for his profile has increased by 85%.
Yeah.
And suddenly he's like, I don't want to top up anymore, right? Okay. So yes, I mean, it's better to buy a plan when you're younger because yes, I mean, you get the added protection and also you save a lot in premiums.
Right.
So,
Makes sense. Yeah. Thank you, Shrehith. This was an absolute pleasure. Thank you for clarifying tons of doubts that we have in term insurance. Yeah. And let's do it more often.
Really good. Thank you for having me as well. I think this is, I've been a big fan of your shows and your podcasts and sort of, I've gotten to learn a lot from your YouTube videos, right? So always excited to share something that I know a little bit, even if it's restricted to insurance. I'm glad I had the opportunity to discuss it with you. So yeah,
My pleasure. My pleasure.
Yeah. Thanks.
Okay, so firstly, hats off to Shrehith. The guy was super patient, answered all our questions, made it interesting with many examples. And although I have placed tooltips throughout the video, the following are my biggest takeaways from this podcast. Number one, always look at term insurance as a financial replica of oneself. That is something that can be an apt substitute to your financial situation in case you meet an untimely death. Align the tenure of your term insurance around your retirement age, which probably means you don't need a policy that extends until you are 75, 80, 85 years old. Consider only those life insurance companies whose claim settlement ratio, that is, the number of claims settled divided by the number of claims received. So the claim settlement ratio is over 98%, and always use this ratio as a filtering criteria and not as a selection variable. While the base term insurance policy is similar, the riders, so things like critical illness, waiver of premium, disability benefit, etc., have different company-specific terms and conditions, so carefully read the policy wordings or work with your insurance advisor to get this thing right. To the extent possible, opt for a large-size life insurance company rather than an insurer that has a very small book. Okay, so I didn't know this, but apparently insurance companies share data amongst themselves. And if your application is rejected someplace, sometime, or if you're caught lying on your application, then you might find it very difficult to buy term insurance ever. And therefore, needless to say, be 100% honest in your declarations. And even after the policy is issued, keep the insurance company informed of any material changes in your condition. For applicants who have a pre-existing condition like diabetes, hypertension, etc., you can definitely apply for a term insurance plan. However, the final issuance will depend on the results of your medical test. The policy might come with extended conditions, and there'll certainly be some premium loading, that is, some extra premium that will be charged by the insurer. And finally, a very friendly suggestion and something even I believe in, please avail the services of a trusted advisor or agent when purchasing a term insurance or even a health insurance policy. These intermediaries, if they are good, will be an asset to you, and as Shrehith explained with many examples, there's always a chance of dispute, and having a strong advisor by your side ensures you or your beneficiaries aren't robbed of something that is rightfully yours. I sincerely hope you enjoyed this podcast, found a lot of value in it, and if you're keen on buying term insurance or simply want to get your doubts clarified, then do book a free consultation call with the team at Ditto using the link that I've attached in this video's description. Once again, thank you for your time, and I'll see you very soon. Until then.